All right, today being FOMC, I'm sure a lot of traders probably stayed out of the market, or people that do day trading. Most traders. But what I want to bring to the table today is talking about, and I did take a trade or two today, and one of them I posted over on the Discord community. So if you're someone that's new to watching the video, if you join the Discord community, it's free. There's a channel on there titled The Trading Floor, and that's where a lot of us traders that are part of the community post screenshots of trades that we take, okay? And it helps individuals that are maybe newcomers to the channel or to the community, or even people who have experience to just kind of understand the trades that we're taking. And those that don't can always ask, because asking questions, it never hurts. I mean, it only helps, okay? Especially someone that's new to trading supply and demand. And I have a certain strategy of how I trade it, okay? But supply and demand is universal. You can trade it really no matter the market itself, because that's all it is aggressive, identifying aggressive buying areas and selling areas of selling, okay? But you have to understand structure of the market, and to me, structure is just really being able to paint the picture in terms of, is the market making higher highs and higher lows? Is it breaking through some major swing area or swing structure? And you have to be careful about the levels or areas in between a major area structure, and you'll have smaller areas like what we call internal areas of structure, okay? So big swing structures, external structure, and then smaller areas, internal structure. And I kind of want to show you this today so you can kind of see this. I'm going to lay it out. I want to map it out for a lot of you that are part of the community that may be still struggling with, trying to understand the structure, movement, or movement of the markets, because it's important. A lot of people probably think, or may think, that, oh, you don't need structure, just use a couple indicators, or I trade support and resistance. Whatever works for you, continue trading that way. But to me, structure is very important because of I need to be able to clearly see what's going on from a bigger standpoint. And structure within the market, when we're talking about market structure, tells the story of what the market did prior to, and lets you know how you how you should be trading according to. All right. I like to trade in areas in which the market is pulling back. So if we have a decent, or breaks a major area of structure to the downside or to the upside, and then you may have internal areas of structure leading up, so the market move away from an area of a swing structure or external structure. It moves away, and then you have a bunch of a lot of times you see smaller swings. That's internal structure. So when the market pulls back, I like to, of course, we want to use in terms of logical thinking, when it comes to, if we're looking to sell, we want to sell at higher prices and buy at lower prices. So let me go ahead and kind of show you today what I was looking at. Today was FOMC, and I'm going to look at it from like the 120 range chart, but we'll look at it from the 60 range chart as well. As you see here, I have two zones marked up on my chart here, one here and one here. I took a trade entry at this area here. This was a supply zone, and we have a structure break. Now, this was a swing structure break. Okay, this wasn't a minor area of structure. This was a pretty significant area of structure break right here once it broke below this area here at 412. So if the market pulls back to any area of supply, specifically ones in which, say, example here, this was a swing to the downside, a pullback, and then a continuation of a swing to the downside that aided or broke structure right here below 411 or 412. You have an area of supply right here, and you have an area of supply right here. Now, you have to think logically when you're trading. Yes, they can reject this area right here, but there are imbalances resting right here, and there's a gap back at this supply zone. So you have to be very careful, because they could reject this and then push higher, and you don't want to get trapped in trades like that. So what happens is, when they get to this area right here, you got to think, are you going to wait for this opportunity to trade from here or for here? Sometimes they'll reject right at this zone here and move lower, right? And then we got another breaker structure to the downside, okay, which would be classified more so as a internal area structure, okay, not a major structure break to the downside. But I would wait for, because this is a swing right here that aided in the breaker structure here below 412, wait for it to come back here. Why? Because this is an untested zone. It's a fresh zone that has not been tested, and there are imbalances resting back at that zone, which means that there's got to be orders left on the table right here if this is aggressive area selling to the downside, all right, in which they would more likely want to get back to transact, finish filling orders there to, push the market down some, correct? So when it gets back to this area here, you got to look above you to see where did the selling start from in this swing here, all right? And it started up in here. So this is the reason why I was looking at, and I took my trade going short once I saw rejection, and I posted that trade over on the Discord community for everyone. Now, this was a supply zone as well, okay? And there's a reason why. I'll explain this right quick, because even within, as the market is forming, say a area of a swing structure or an external structure that's forming, when the market pulled back right here, and then it started breaking lower, look what took place here. It pushed down, we pulled back, made a higher low right, a lower high right here. And then we made a low. It broke to the downside. It pulled back, okay, another lower high, and then it broke again to the downside. So we made a new low here. But all this is forming, okay, this bigger area of structure right here. So this is why I said kind of wait some time to see what's taking place and look to see if you got the bigger picture unfolding, meaning a bigger area of structure unfolding. So what took place is it pushed down. Then it pulled back, okay? So, and when it pulled back here, it broke above this area here, okay? So it broke above an area of structure to the upside, but then it broke structure to the downside when it broke below here at 17,426. Leaving behind, yes, we have a supply zone resting right here and right here. But again, use your mind and think logically. If the move started from right here, where it pushed to the downside and broke through this area of structure 426, what would you be? What area would be wiser to trade from, here or here? Right in this area here. This is an untested area of supply as well, and there is an area of imbalance resting in between this area right here. So I would wait for it to get back here, because you got to think in terms of they're always going to the market has to mirror itself in a sense. They always have to come back to areas and fill areas of imbalances. You have to think about that, because there are orders that are resting on the table that need to be filled. And when the market gets back to that area, as you can see right here, what does it do? It rejects it and pushes lower, and then it breaks structure. So you have to think in terms of like this. So this right here was a structural break to the downside. Now, if we look at in terms of what would be classified as a major area structure or a external area structure, look. This right here, I'm just going to kind of use a drawing tool and see if I can, I don't know, we're using ellipse right here. This right here would be a low, okay? This right here would be a high. Low, high, but it's forming a swing, an area of structure, which would be classified as an external structure once it breaks below this low right here. So now we have a new low that was printed right here. And so when it broke here, we have a major area of structure break, okay? So again, you can look for key areas where the market's pulling back to supply to look for opportunities to go short. Now you may be saying, well, what if the market starts to retrace back and it doesn't break this high up here? Now think about it like this, because if we do break this high, because this is a external area structure or a major swing structure area, then we've got a structural break back to the upside. This would be a major high that's broken right here at 17,518. It does eventually do that as it, when it starts to move back higher right here. But if it doesn't do that, okay, but we did make this low right here, and the market is moving lower because we got a shift to the downside in a major area where this low was taken out here. Okay, this is a external structural break to the downside. But then we start pulling back, okay? So where the market makes a high, a low, and then another high to the upside, but it never takes out this area of structure right here, this major area of structure right here, okay, or this external area of structure, and it just continues making highs, higher lows, highs, higher lows, highs, but never break this area here. And then we get a fold to the downside, say like here an example, so where we start to move lower, making lower lows and lower highs, okay, we never broke that high up there, which is a major high, but just kept moving to the downside. So all this in between will be internal areas of structure. You have to understand that, because the market can just pull back, never break this high right here, which is a major high, and then on the movement to the upside was making these higher highs and higher lows, and then it transitions where it starts to make lower lows and lower highs to the downside. Yeah, we break through this low right here, but it's going to have to break through this high up here, which was a external area structure that formed right here, if we want to see basically the trend change in a sense. Okay, I mean the overall a shift in the market, the trend in the market changing in the opposite direction. So right now we are bearish because we're breaking, this is an external area structure, and as we continue pushing lower until we come back up, say for example, and maybe broke this area here, then we are still bearish. But look what happened, as you can see here, it eventually did push up to the upside, and this kind of all unfolded at 2 o'clock FOMC. The market blasted to the upside right there, and it did break this high. So right now we are, because we broke this major high right here, this external area high right here. Now I would be definitely looking for opportunities to go long, because we just had a trend reversal because of this structural high being broken right there. So I'm going to do away with this right here, and as you can see, the market's pulling back right now. But I'm not entertaining what's going on because of the major news event this afternoon. So, but let's move down to a lower time frame. To the higher base time, or even a higher base time frame, a 120 range. And what I want to show you here is that you see this big move right here where we pushed up, pulled back, and then broke to this high right here. Okay, so when the market started folding back, what did we do? We started taking out some swing areas to the downside, right? So it started breaking structure back to the downside. When we did that and started swinging to the downside, turned back around, what did we do? We came up and took out this high right here. So this just made an external swing structural break to the upside right here, taking out this major high resting right here at 798, okay, or 797. So for it, or for us, I'll say it like this. Well, let's take a look. Let's follow suit with this. So we broke structure to the upside, then it pulls back, and then it makes a slightly higher high here, okay? But then we fold back to the downside right here, and then it turns back up to the upside again, and what does it do? It takes out structure right here again back at 17,825. You see that? So then we started making little moves back, continuation, moves back to the upside. So a lot of times, if we were moving down to a lower base chart, you could look for pullbacks to go long, of course, because we are bullish. Now, when we start breaking through, let's see, this low here, that'd be like the first shift, trend reversal, or I should say change of trend within the market. Okay, I'm going to say it like that, because this low right here, this external swing or external area of structure here, this low here, would have been taken out. Okay, so as it continues moving to the downside and pulling back, you can look for opportunities to go short. Now, we're not taking the trades off the 120. I'm just showing you we're using a higher base chart or even a higher base chart to kind of look further out, to kind of depict which way to kind of trade, because we just have a change in tide, meaning a trend change, because now which we were bullish, we're bearish now, or should be bearish, because we broke through this area of external structure right here, this low right here. And as you can see, the market continues swinging to the downside right here. So on the higher base chart, 120, for example, we're not looking to take trades off of 120. If we see that this low was taken out right here, this external structure area, okay, I'm just going to use this fib retracement tool. I don't trade fibs. I'm just going to show you about, in terms of premiums versus discount areas, we're looking to sell because the market broke through this major area of structure right here. Okay, this low. So if it did that, broke up here and then it broke down, the move started from here. The last leg of the move from here to here was down here, the low right here. So we want to look for opportunities, because if the market is moving to the downside, opportunities where there may be key areas of supply to try to take it in continuation with the move to the downside based on what happened on a higher base chart. All right, and that's what we move down to once we tap into a zone. I talk about part of the strategy, scaling down and then looking for a better entry point. But anyways, in this case here, you can see that this is the 50% area. Yeah, the market can react there, and there is an area of imbalance resting right there. But this is the full-on leg after that external area structure was broken right there to the downside. So, the market could actually come back to, if we're looking for fresh zones, it could come back to this area here as well, right here. This would be, you know, a good area too, because now we are tapped really into an area at a premium area. We're selling back towards the top here of the leg here. We're selling was accumulated and started to take place more into the market. So right here, this is a untapped zone, a fresh zone. Okay, there's plenty of imbalance or areas to be filled on the way back up here. So something can happen up in this area here. Okay, and the way to do it is if you mark it off 120, then just kind of move down to a 60 and maybe even 12 and start narrowing down the zone. Okay, you don't want to take it from the higher base chart, because even if it gets here, unless you swing a position trade and you got the kind of capital to kind of weather that movement, then that's fine, but that's up to you. You'll be in the trade probably for a while before it moves in, you know, your direction. But anyways, it could come back up here and reject this area. Now, when it got here around the 50% area, yeah, this was on a small little gap right there back at the zone, but it blew right past that. Of course, you know, FOMC. So, but I don't, you know, 50% area, you know, halfway of a leg I talk about, I'm not interested in that area. I would like for it to kind of pull back higher up into. Again, I'm not trading fibs. I'm trading supply and demand, but I like to see it pull back up to where the move started at. We broke this external area structure. So up in here somewhere will be, you know, an eye-catching opportunity. And this is probably going to be the last opportunity you're going to get, because as you see, there's no other areas that would have been, or areas of supply that were untested. So this would be the area right here around 17,845. Okay. But anyway, let's do away with that. So I want to kind of show something else here. So if we look at like, I think it was the 25th and the 26th leading up to the 28th, 29th anyways, we can see that the market, it pushed up here. Okay, so we made this high right here, and then it pulled us back. So this was like in the transition from the, I think the 25th to the 26th, when the market reopened back up at 6 p.m. Eastern time. So into the evening hours. But either way, we had pushed up higher before the close. Okay, we pushed up higher. We broke this area here. We pulled back, and then we broke structure above, breaking above here at 828. I'm just kind of giving you a full idea. So this was a external area structure, a major swing break to the upside. All right. So as long as the market is, you know, these smaller swings as the market is pushing to the upside are just what I like to classify as internal areas of structure. Okay. Because they're not major structure. They're not major areas of structure. They're smaller areas. The area, which was this low right here, we break this, then we would have a major structure break, okay? External area structure, because this was a major swing to the upside right here. So each time the market pushes up to the upside, okay, you get a structure break, and there's a decent area of supply, demand, resting back, okay? You can look for opportunity to, you know, go long, all right? So the market pushes up here, it never comes back right here at the zone, it pushed up, pulled back, then it broke higher here, as you can see. This right here came back to this area. This was a demand zone. That's why it pushed back to the upside right here. And the market continued swinging to the upside. But what I want you to pay attention to was right here as well. When it did this, when it's continued pushing higher here, pay attention. We kept making higher highs and higher lows to the upside. Okay. It never broke back and broke below any area or major area structure. Okay. All this was internal structural breaks to the upside. And as it continued doing that, it made higher lows, highs, higher lows. And then this was another structural break to the upside right here, as you can see right here at 922. But pay attention what took place right here. So this is this area right here, which was formed right here. This is an external area structure. This is another major area structure that formed right here. This is what I don't like to classify as an internal area structure, and the market broke below that. So if it breaks down below a major low, a external structural low, you have to think in terms of where can it come back to and possibly look for an area of supply. So take a look here. All right, I'm just going to draw this out so you can see it. I'm gonna try to blow this up a little bit. This was that one low I was talking to you about. That was the first major area structure break, or external area structure break right there. And then it pushes up, pulls back, okay, and then it breaks structure to the upside. So this right here is actually another area or major area structure break right here. So let me show you this one as well. So let's say we made a high here, pull back, and then it made a new high. It runs lower, it takes out some area here as it's pulling back. And it actually comes back a little lower here. So let me grab this, because it actually came here and then it did this right here. So let me, do this. And then it did this to break structure to the upside. But all it did was keep climbing to the upside here. But what it did right here, if you paid close attention, when it made, let me bring this back some because this was the high that it where it was broken at right there. What it did right here was it made a high, it pulled back, it made a new high, and then it pulled back right here deeper, broke below this area to break structure back to the upside. But when it shifted back to the downside, it started taking out some, some levels or area structure. It took out. We have two. Let me do this. Two external areas of structure lows right there. The market broke this low right here. When it broke this low right here, you have to think, okay, where did the move start at? Of course, it started up here, right? But it could have been some swings to the downside. The market slammed lower, aggressive selling to the downside right here. So what you could do is just, if you want to, use your fib tool, all right, and look for an opportunity to where you can get into a trade at some key area of supply. It broke through a external low here, and there was a low right here as well. But this was the first low that it broke right here. A first major area, or first, if you want to say major area or external structural area low that it broke through on the downside. Look what happened, because there were some people that took this trade right here when the market came back to this zone right here. As you can see, it came back to it almost to the tick right there. And when it got right there to it, it wicked away from it. And you hear me talk about wick rejections and the market not closing into a zone. But this was powerful stuff, because look, it comes all the way back up there, a little bit above the 76 and say 0.4% area, back at the top there where the move started back to the downside. We got a structural low being taken out right there. So you've got to assume something's going to happen if we reject this area here. Again, we're not taking the trade on the lower base chart, but you can move down to an even lower time frame like the 12 range and look for, maybe look for an area of supply back in this area here, okay? And look for rejection to go short. So we're just using the higher base chart or the higher base charts to help us form a direction. Look for those major versus minor areas of structural breaks. Major areas I like to classify as external areas. Minor areas I like to classify as internal structural breaks. So you have to pay close attention to major versus minor structural break areas. Okay. So all this would have been as it was moving higher. These smaller areas of moves to the upside were just internal areas of structure that were being broken to the upside. Okay, as the market continued breaking to the upside. When it pulled back here, made this high here, pulled back and broke structure to the upside, that was a major structural break to the upside, external structural break to the upside, or what we have now a major low resting at, and right here. So, but the first low was right here, or major area structure that it broke to the downside was right here. When it did that, then you can look for, again, an opportunity for, from a selling standpoint, this is aggressive selling. Wait for the market to get back to an area of a premium area to where you can look to go short. And that's why I like to use the volume profile. I'll talk about that because I use it as a means of a GPS to put me in the direction. I don't like to take my trades right at a high volume area. I like to take them above, okay? Because the market likes to move from low volume to high volume, in regards to that. So I wanted to show you that. Just look for those structural breaks. And the same thing in opposite of, if the market breaks through a major high or a external structural high, then you can look for pullbacks to go long up until the point to where the market maybe is shifting in a different direction. So you've got to be able to really spend time on the charts and read and know what's taking place. So I hope the information that I covered today, kind of opened up your eyes a little more, maybe shed some light on in reference to, swing structure, meaning external and internal areas of structure, what to kind of look for. You have to be patient and wait for the bigger picture to kind of unfold. You got to look for from a broader standpoint, using top-down analysis and making the right choices of which zones to trade. Trying to trade even these small little swings, you're going to get caught up. You have to take the right setups and know which zones, speaking of supply and demand, to take your trades from. Outside of that, I appreciate each and every one of you guys that continuously watch the videos on a daily basis, that have been following the channel, that support my efforts as a content creator. If you're not a current subscriber, please take the time to go ahead and click on that sub button. Make sure to share the videos as well, across maybe your own social media platforms or friends or, whatever the case is. And because I'm just trying to reach to the mass of people that are interested, especially for one, trading futures, and maybe interested in definitely trading supply and demand. But this is how I trade it. I didn't go into detail about trade breakdowns today. I have plenty of videos here on the channel where I talk about trades I've taken, showing in detail how to take those trades. And there's also, if you want to become an elite member, which the link is down in the description portion of the video. You'll find a link that says become an elite member. You receive my trade breakdowns as well as the video playlist of links and just other informative videos that I make content on that is for the private community of members, those that support my efforts as a content creator in a sense of, and want access to the additional content. That's all it is. So if you want additional access to see trade breakdowns, to where I kind of walk you through my mindset of the trades that I take, it does help. It helps people to see really full on, trades that I take, because I talk about where to place your stop at, where to take your profit at, and things of that nature. So you get an idea and a feel of kind of what to look for yourself when you're trading. And then also I kind of narrowed out, so you don't have to watch all the videos here in the channel, by picking out a series or link by link series of videos that I feel like cover the most hot topics, the pertinent information surrounding how I trade. But that's up to you if you choose to do so or not. But if you do, you support my content, my efforts as a content creator here on the platform. But I'm just giving back in reference to information and knowledge that I know to the community. I want to see people succeed and be profitable as well. So, and I hope everyone was successful today trading. Even though we have FOMC, some people stay out of the market on days like this, and I don't blame you. But outside of that, that's all I have for you. Again, if you're not a current subscriber, please take the time to go ahead and click on that sub button. Make sure to turn on all your post notifications. And if you found value in today's video, please drop a like on the video. Take care.